Hey guys, in this video we're going to look at ECYT, Endosite. Um, I took a look at the news here on Market Watch, and it doesn't look like there were any fresh news this morning. I mean, it's a continuation, but yeah, I mean, there's just this little headline here. Uh, yeah, I'm not quite sure, but I couldn't find any big headlines on Market Watch. So let's take a look at the levels here. So this stock, um, it opened and it didn't make any big moves right out of the gates. Um, let's see, what's this move? 571. So yeah, nothing really worth taking note of. But starting this candle, you could say, um, at the 580 level or 579, made a big move all the way up to 627. So that's a nice move, 47 cents. Um, and let's take a look at the volume here. So the first candle happened, and it's 323,000 shares of volume. Second candle had more volume, 374,000. But as you can see, the second candle closed red, but is the candle that made the new high. And so what I'm guessing is that some there were some buyers here that got in late and wanted to know make it keep going, but it ended up not working. And at the end, the sellers won, and it pulled back here to 608 all the way from 627. So big volume in this one, but again, probably carried over some of the momentum. Then the second pullback candle had considerably less volume, 123,000. Then third pullback candle here, smaller in range, close red, lower volume at 113,000. And the next candle was the breakout candle. So the breakout point was 617, and it did reach a high of 632. So it's nice little decent move. You know my I some people like to trade or to buy close to the breakout point, right? So for instance, let's say that I follow that strategy, and I see this candle close, and then this next candle occurs. I know that 617 is a breakout level, and perhaps I buy at 615 or something like that. I like to buy a little lower. I actually like to sort of anticipate uh, where the lowest level will be. I like to wait for the stock to make a big drop and buy close to that level. Of course, it's a lot riskier because you do not know um, if it's going to keep going lower, right? Or if it's just going to consolidate for a couple more candles. Then you got to hold a little longer, which is a bit nerve wracking. Uh, but if it does break, if the pattern does continue the way it's supposed to, or the way we'd like for it to continue, let's say that I bought down here at 606, right, and keeps consolidating here on the pullback, and then we have the 617 level, which is a breakout point, and I don't know, let's say that I sold at, I don't know, this at 627, right? Not quite at the high, but 627. So that's a big move from, I forgot which level I said I bought, but it's a much higher gain than buying near the breakout point. So again, it's riskier. That's why I like to have very, very tight stops, and it doesn't always work out. But it's something that I'm trying out, uh, and I've so far it's worked out, but I've had some big losses because I didn't respect my stops. And I also had some losses where I did respect my stops, but you know, it just dropped like a cent or two below my stop, but then it went back up, and then it made a stock made a huge move. And but that's the way it is. That's why I'm making this video, is because yeah, I want you, a beginner trader, to if you can get some value out of this, to get some value. But it actually helps me out a lot, just to go go over it, out loud, and actually talk about it. But anyway, so yeah, so we have this level 617 breakout point. So we see volume is nice because lower volume with the pullbacks. Then we have this one, this candle right here, 617 breaks all the way up to 632. Then we have another breakout, another pullback candle, and then here's the high of the red candle, the first pullback candle, uh, and it did break that level on the next one, 637, but it didn't end up pulling up. It closed red, and from here it kind of traded sideways, but going, reaching new, kind of getting lower over the next few candles. And from here, let's take a look. So yes, so it got below the 9 EMA, it broke the 9 EMA, but it always bounced back up until this candle, and then when it got back up, it started riding over it. I think it's called the moving average retracement. This strategy, I don't know how to trade it yet. I mean, my guess is that a stock that has a lot of momentum, has a pullback, has consolidation that goes below the 9 EMA, and once it gets back up for a candle or two and it starts respecting it, I guess that's the time to buy as close to the 9 EMA. I've kind of studied it a little bit, but not a whole lot. I'm not comfortable enough to trade this type of pattern just because it takes a lot longer to um, to see any exciting gains. Uh, but uh, but yeah, that's ECYT. I mean, a pretty short video. You could call it a picture perfect 5-minute bull flag with less than 50% pullback, 3 pullback candles, and then a nice break. Uh, Not huge break on the second breakout, but it was a nice little profit if you traded it. But yeah, that's about it. If you have any questions, let me know. Any comments, any suggestions, leave in the comment section. And as always, guys, we'll see you on the next one. Have a good one.